Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields. Held the range. Again, we didn't see a breakout move below 280 after that thrust we saw a few days ago down to new lows. It's basically the lowest weekly settlement we've seen since mid-July. It isn't that significant other than the fact that we were just recently talking about getting above 3%. Now we're talking about getting below 280, and the market just remains in that range. It's not seeing any sort of big move outside of the macro range, which has been 280 to 3%, and on a wider basis, 275 to 310. But right now, 280 to 3% is it holds, and the market just kind of gets complacent once we get to those edges, which typically doesn't happen. And if we look at what's going on in market volatility, it is elevated, as it should be. It's not spiking to fear levels, but it's elevated as we continue to get through what's going to happen with trade talks, what's going to happen with issues in Turkey, what's going to happen with the issues going on in China, what's going to happen with things going on with Iran sanctions, and blah, blah. There is a lot of risk out there, and we will continue to see Treasury volatility remain elevated, especially if equities can't hold on to their gains. That'll just feed into it a little bit. So again, I think that volatility should be higher, but I'm sort of satisfied that it's not on the lows and trending lower sort of track that we've seen it on. And lastly, let's talk about next week. Yes, amidst all that's going on in the Treasury market with yields going down and yield curves getting flatter, we have a few key events that are coming up. We have the August FOMC minutes on Thursday, and we have the Jackson Hole Symposium put on by the Kansas City Federal Reserve next Friday, Saturday, or Thursday, Friday, and Saturday. And we will get Chairman Powell to speak on Friday. So that is going to be key. He's going to be talking not only about the economy, but also monetary policy. It's a time for him to use, as former Fed chairs have done before him, to get involved and kind of throw out his ideas sort of off meeting and off schedule. So it will be key. And he's a very succinct speaker. Recall that he does not use a lot of fluff. He does not use a lot of ho-hums. He gets right to the point. So it could be a very interesting speech he gives out there from Jackson Hole. So right now the bond market holding the range, yet yields are tilting towards the downside. Perhaps Mr. Powell will have some things to say to change that. This is Todd Colvin coming to you from the floor of the CME Group.